Welcome back to Forex Daily Breakdown, the channel where we simplify Forex and help you grow as a trader, one breakdown at a time. In today's video, we're going to cover some of the most powerful concepts in trading that can literally change how you see the charts. We'll break down: what is market structure? Bullish and bearish trends. Consolidation zones. Break of structure. Change of character. And how to apply all this on a real chart. So make sure you don't skip any part of this video. Let's get into it. What is market structure? Market structure is how price moves on the chart. It tells the story of buyers and sellers and shows us who's in control. For example, if Eurist is rising from 1,0800 to 1,1200, pulling back and rising again, that wave-like movement is market structure. Once you understand it, everything else becomes clearer: entries, exits, and even reversals. Bullish market structure. In a bullish market, price makes higher highs and higher lows. Let's say GPUST rises from 1,2500, pulls back to 1,2400, then rises to 1,2600, pulls back to 1,2450, and finally hits 1,2700. That's a clear bullish structure. You want to look for buy setups around the higher low, not at the top. Bearish market structure. Now flip it: a bearish market makes lower highs and lower lows. Like USD/JPY dropping from 152.00, pulls back to 151.50, drops again to 150.80, and pulls back to 151. Each time, price fails to break the previous high and makes a new low. That's bearish structure. Time to look for selling opportunities. Consolidation/range-bound market. Sometimes price doesn't trend. It moves sideways. This is called a range or consolidation. For example, EUR/JPY might bounce between 160.00 and 160.80 for days. In this case, you can either scalp between support and resistance or wait for a breakout. Just don't get trapped trading inside the noise. Break of structure. A break of structure means the market has broken the previous high or low, signaling a shift or continuation. Let's say AUDIS keeps rising to 0,6700 but then drops below a previous higher low around 0,6600. That's your BS. It's the market's way of saying, we're done going up. Change of character. Change of character is one of the most powerful concepts for spotting early reversals. Imagine dust has been in a clear uptrend but then suddenly makes a lower low instead of a higher low. That's your change of character. The first sign: buyers are losing control and the sellers might step in. Live chart breakdown. Alright, now let's apply everything we've learned so far on a live chart. We'll break this down step by step, starting from identifying market structure, to confirming trends, spotting CHOCH and BOS, and finally knowing when and where to take action. Step 1. Identify the swing points. First, zoom out a little and identify your key swing highs and swing lows. These are the points where price changes direction. Highlight the highs and lows with a drawing tool. As you can see here, price makes a high, pulls back to a low, then pushes to a new high. That's a sign of a bullish structure: higher highs and higher lows. Step 2. Confirm the trend: bullish or bearish. Now ask yourself, are the highs getting higher and the lows getting higher too? If yes, you're in a bullish market. If you're seeing lower highs and lower lows, then it's bearish. Use an arrow tool to mark the direction of structure. This helps you stay in sync with the market. No matter how good a signal looks, never trade against a structure. Step 3. Spot the break of structure. Now here's the good part. Look at this higher low. The moment price breaks below it, that's a break of structure. It's the market telling you something has changed. Draw a horizontal line at the broken low and label it BOS. This is often followed by a retest, which gives you a second chance to get in or stay out. Step 4. Watch for change of character. Now, before that BOS happens, you'll often see a change of character. That's when price makes a lower low before the structure breaks. It's your early warning. Like here price fails to make a higher high and instead drops aggressively. Mark the chalk with a red label or text tool. That's your heads up, start watching closely because the trend might flip. Step 5. Putting it all together, trade setup practice. Now if I was trading this, here's what I'd do. Identify structure, bullish or bearish. Wait for CHOCH, early signal. Confirm with BOS, strong confirmation. Wait for a retest of broken structure. Enter with a tight stop loss and clear take profit based on the structure. This is how pros read the market, not with indicators but with structure, story, and confirmation. Practice this every day on TradingView using the replay tool. Just go back to old charts, press play, and try to read the structure live. You'll get faster, sharper, and more confident over time. This is how you train your eye. Structure never lies. Key takeaways. Let's recap. Market structure shows the direction of price. Bullish equals higher highs and higher lows. Bearish equals lower highs and lower lows. Ranges equals no control, be careful. BOS shows a shift is happening. CHOCH shows the first signal of a reversal. If you can master this, everything else becomes easier from strategy to execution. If this breakdown helped you, hit that like button, drop a comment below with your questions, and subscribe to Forex Daily Breakdown for more no-fluff, real Forex education. I'll catch you in the next lesson.